right. Welcome, everybody. Give a minute or two, let folks kind of filter in here. Thanks for joining. And then we'll launch right into it. That sounds good.
Perfect.
Nice. Maybe while we're waiting, for those interested, tell us where you're calling in from. I'm calling in from Louisville, Kentucky myself. It's my hometown. What about you guys?
I'm calling in from Boston, Mass.
Nice.
How about you?
Calling in from
And,
Salt Lake City, Utah.
all right. Got Salt Lake, got San Diego. Alex, what's up? Cool beans. Well, I don't know. We got a pretty good group here, guys. What do you say we go ahead and launch it up?
Sounds great. Yeah, excited
Cool.
to meet everyone in the chat and looking forward to great webinar today.
Awesome. Well, I reckon I'll take it from here. Let me share my screen and we'll get started because I know everybody's got a lot to do. We got businesses to run, so let's go ahead and jump in. We'll try to create as much value as we can here in the next 55 minutes. Yep. So today is this webinar is all about how to leverage a financial model to raise capital, right? So we call them press investors and close checks. So end of the day, right? For me as a founder, for I'm sure you guys as well, like, yeah, you're trying to raise money, you're trying to, tell a story to impress investors, to get them to write you a check. It's all about how can we leverage a financial model like like kind of a secret weapon, like a closer in that process to get folks over the line. That's something I've seen work really, really well in my career. And so that's what we're going to talk a little bit about today. Give you a sense of who I am and what gives me the right, to be here chatting with you guys. So I'm Stephen Plappert. I'm the co-founder and CEO of a company called Forecaster. And in my career, I've raised a little bit more than 10 million in venture capital from 15 different VCs. I've also had the great pleasure of being a fractional head of finance for over a dozen startups, of which I sat in the seat with them on a lot of cap raises as well. I've started 2 companies myself. I've taken them both through Techstars. And in between that's why I did that fractional financial work and built lots of financial models. That's where I met Logan. So I'm a founder. I'm a finance guy. That's kind of my jam. And for those that don't know, a forecaster, which is my baby, it's an alternative to Microsoft Excel when it comes to building and managing a financial model for your startup. So that's a business that Logan and I have been building for the last 4 years. We've got about 700 startups using Forecaster now. We just crossed over 2.4 million in ARR, so we raised about 9 million. So we've been kind of at this game for a little while on that front. And what's kind of neat is like everything we talk about today in terms of like how to use a model to raise capital. We've raised 3 different rounds at Forecaster. And of course, we practice what we preach. I've done everything I'm about to tell you to do, to raise the amount of capital that we have. And it's worked really well for us. So hopefully it'll work well for you as well. Oh yeah, and also anybody on the call today, you do get 20% off of Forecaster if you end up interested and want to check it out. If you could use a little bit of help on the model, maybe take it off your plate, work with an expert, that kind of thing. So Jimmy can share kind of a link to in the chat and stuff like that. But would love to work with anybody that's interested. If you want a little bit of help, it's definitely right in our wheelhouse, right? It's all we do all day is help founders build great models and raise capital, and there's a number of different ways that we can get involved from kind of an essential level, just to build that model, make sure you're gonna meet your reporting requirements for investors. We go all the way up to fractional CFO services as well, and we do it exclusively for startups. So it's something where we're really focused kind of on what we do. But enough about us. This webinar today is about learning. It's about putting kind of tactics into practice, and you can do that. I just want to be very clear, whether you're in Forecaster or Excel or Google Sheets, wherever you may be. So don't feel pressured, to check Forecaster out or anything like that. It was just we'd love to help you if you're interested. But today we're really going to focus on two main things. We're gonna focus on how you use a financial model to raise capital, kind of broadly, and then more specifically within that, how should you present your financial model to investors? That is really where the value gets created. Is you're presenting a financial model to investors, and you're in so doing giving them confidence in you as a founder. You're building trust, and you're telling your story with numbers, and that tends to resonate really well with investors. So we're going to really focus in on that. And we're going to go through these topics conceptually. So I'm going to talk about what you should do, at that like conceptual level, right? But then we're going to jump out and I'm going to show you, my example, right? Like we just raised 4.5 million this past year in 2023, tough venture market. I'll show you the deck I used to do that. I'll show you how I used my model in that deck. I'll show you how I walked investors through my model. And my hope in doing that is that, you can kind of learn conceptually what you should do. And then if we do it in practice, I think that'll build a little bit more of a bridge for you on, how you could put some of these things into practice yourself. So yeah, that's what we got in store for you today. And if you got questions along the way, please don't be shy. Please, drop them in the Q&A or the chat, and make sure, we get your questions answered, and Jimmy can flag those up for me as we go. So
Before we begin, Stephen, our first
Yeah.
question that came in, what is the difference from other FP&A software?
on Forecaster?
Mhm.
Honestly, I'd say the main difference is probably the human element. Like one of the things I think we do really well is we give every single Forecaster customer an analyst who's an expert in building financial models, and that analyst works with that customer to build them a great financial model. So of course, I think we've got a really awesome software, integrated with QuickBooks. It's pretty user friendly, but there's some other FP&A softwares out there that could say the same thing. But I think really getting that expert that can kind of take the work off your plate, that can have your back, I think that's something that's unique to us. And thank you for the question. All right, so I got a question as well, which is what is a financial model, right? Before we talk about how to present them to investors, we got to say, hey, well, what is a model? And the way we think about a model is that it's a business simulator. So we think about a model as saying, hey, a financial model's job is to simulate your business into the future. Why would you do that? Well, you have a business to build, and you want to set goals, and you want to understand what the potential future of that business is. But in the context of today, like we want to share that with investors, right? Like we want to convince investors that we have a business worth investing in. And so we want to simulate, from where we are today, which is probably not that interesting, no offense to anybody on the call, my business isn't either, to a very large, meaningful business, a business with real staying power, a business that can drive significant return on investment. We want to simulate, where we go from point A to point B, from the current state to the pot of gold at the end of the rainbow. And we want to convince investors that we know how to get there, And so that's what we're talking about when we build a financial model, is like telling that story of how you go from where you are today to that ultimate exit point that's going to get an investor really excited. I think that's where a model can really shine in the fundraising environment. And so it's kind of this question and answer game where, like, when you're gearing up for a raise, you should absolutely be using a financial model to answer some of these questions for yourself, because you got to get straight on your answers, and then you got to deliver those answers to investors. So use the model to understand how much money you should raise and when you think you can reach certain milestones, setting goals, planning the use of funds, that type of thing. Because ultimately, when you get into that round, and you inevitably, through the greatness of yourself as a founder and the merits of your business, like you get an investor excited, then you're going to get questions. Like the investor is going to be doing diligence. They're going to be asking questions. And if you can answer those questions in a way that inspires confidence, and you can answer those questions by the numbers, it just has a tendency to really resonate with investors, and to get them excited about the business. It's not really something that I tell many founders to lead with. It's more of a closer. It's like lead with all the exciting stuff about the business, but then as you get them into diligence, once they're past that, it's kind of this question and answer game, and that's where you'll be able to help kind of get them over the line and close them as an investor. So that's one piece of it. Another piece is this, and this is something I really like to highlight for folks that are earlier in their journey. You know, like we're gearing up for a Series A at some point, probably later this year. At that point, modeling is very much table stakes. Like the better the model, the better you present it, the better off you're going to be. But where you really get the brownie points, so to speak, is at that pre-seed seed stage. Like that is where this can be a big separator for you. You know, it's like, yeah, there's a lot of unknowns. And so the output of the model, right? The forecast is like, there's more risk in it and that kind of thing. But it's not really about that. It's about like showing the investor that you're the type of founder that puts critical thought into the financial aspect of the business. That's something investors really like to see. And case in point, like there's just a lot of founders at the early stage that just aren't doing this right now. And I think their mistake is your opportunity where if you really take this to heart, if you build a model, if you can present it to investors, you just look that much better than the other investors competing for those same dollars. And it is a competitive game that you're playing when you are raising capital. So you got to be thinking, hey, how do I nudge out this other person in the race? Sometimes it's something like this can really be the difference maker. So it's totally within your control. Early stage investors, you know, some of them don't care about this, but a lot of them do. And when you can do this stuff well, it just makes you look that much better than those other founders out there. So that's one last thing I wanted to mention before diving into, you know, the first kind of major topic I wanted to discuss with you guys, which is like, how do you use your model in a pitch deck? That's usually where the model shows up first. So I thought we'd handle that. So, you know, for that, it's one of these things where like I think of a pitch deck as like a charismatic expression of your narrative, right? Like your pitch deck is this visual supporting aid to a story that you're telling, and it should be designed to support that story and supercharge that story and like get an investor excited with visual aids. So you're going to lead with all that interest building stuff to like set the hook, you know, and convert them from an initial meeting into a diligence process. But like once you do that, right, it's like, well, what's that kind of next step? And I think that's where a model can really shine is like towards the end of the deck, and you'll see this in mine, you want to kind of tease the investor with financial projections. You want to kind of flash the output of your financial model in front of investors just to kind of satiate their curiosity and kind of say, hey, look, like this is where we think this business is headed, right? And this should really do two things. One is the investor, upon skimming this output, and I like a summary annual income statement like you're seeing on the screen. This just when the investor scans this, they should be thinking, hey, that looks attractive enough to meet my return profile at, you know, my requirements as an investor, right? This should be a good business for me if this works out to be true. But also that looks reasonable, right? Because one of the things I think investors see a lot is like a financial forecast that's just so ludicrously optimistic that it just loses credibility. And so you want to kind of be in that Goldilocks zone where you're showing a revenue ramp specifically, right? That like, you know, it's like doubling or tripling year over year. You're getting into that realm of a 10x revenue multiple giving you like $1 billion valuation. Like if you're going for venture, right? If you're going for venture scale, you're kind of teasing the investor with that projections, and you want to be setting yourself up for them to be asking this question, which is like, where did you get those numbers, right? I'm seeing these numbers look good, but anybody can put good looking numbers on a slide, right? It's like, where did you get those numbers? And that's where your model comes in, right? Your model is what produced those numbers, and that's where you can say, hey, look, I've got a great financial model I've built for the company. I'm the type of founder that really takes the financial aspect of this business seriously. We recognize that we're an early stage company and there's a lot of unknowns, but like we put real thought into this, and I would love to sit down with you for 45 minutes or an hour, walk you through that model and have a good strategic conversation about the business, because I think that would help both of us understand if there's a deal here, you know, right? Because it's a two-sided deal, right? It's not just them making a decision, it's both of you. So that's the kind of spirit that you want in there, is like using that model as a conversion mechanism to get the investor from an initial pitch meeting, right, into a meeting where you present your model to investors. And that's where you can really shine in the sense that you know how to present a model to investors and you know the financial aspect of your business. But even more importantly, it just gets you back in a room with that investor where you can have strategic conversation about the company, which will drive trust, which will drive confidence, which will increase your conversion rate. So it just, the more face time you can get with investors, the better chances they're gonna say yes. So that's how I think about fundraising. It's like this funnel where you have a bunch of targets, you get those to an initial meeting. Your job is to convert as many of those initial meetings into diligence as you can. Using the financial model tactically in this way can increase that conversion rate, which will ultimately increase, your conversion rate to a check. So that's the idea here. You want to get them in a room where you can talk about the numbers of the business, right? And so we'll talk a little bit about some of the tips and tricks there, and then we're going to jump out and I'll kind of show you all my stuff. So before the meeting, right? So like, let's say you get to this point, right? Don't share the model before the meeting. It's very important that you kind of hold the model hostage for the meeting because it's the meeting that has the value. There's no value inherent in the model. The value is in you discussing the model with the investor. So you don't want to send that over on the front end. You want to hold the model hostage. And if an investor says, hey, look, I've seen a bunch of models, why don't you just send it over? Then I would politely say, hey, I actually prefer to walk through the model. I'm sure you've seen a bunch of models, you get it right away, but I want to talk more with you as an investor. End of the day, if we do a deal here, it's going to be 5 to 7 years of our life that we're going to be working together. I think we need to get back into a room. We need to discuss this business, and we need to see if we work well together. That's the only way we're going to get to a deal here, right? And I hope you would agree. It's that type of mature, content, right? Response that's going to get an investor saying, hey, look, this guy actually knows how things are done. Let's jump on a call. And you want to control that narrative. Like, you don't want an investor poking around in your model when you're not in the room finding things to not like. You want to be in the room when you're having that discussion. So the investor's like, hey, I don't really understand that customer acquisition. You're right there. You can overcome that objection in real time. You have so much more power when you're in the room. So get in the room, force the room to happen, right? And then in the meeting, it's one of the big mistakes I see founders make in these meetings is there's a tendency to go deep and go into the weeds and all the nook and crannies of the model and try to talk about that as an attempt to try to convey that what's going on there. And that has merit, but really we don't want to go that deep because it can open up a can of worms. What we want to do is have a high level strategic conversation, and then make it a dialogue, make it a conversation, not a lecture, and only go deep where the investor specifically would like to go deep. That's going to hyper focus your time on any kind of objections or concerns or questions that the investor has, and it's not going to open up any can of worms where they don't need to be. And so you'll see that when I talk about mine. But a lot of times, the other hack on this is like you can actually get through this whole meeting without really going deep into the model at all. The model just becomes an excuse to have a strategic conversation about the business, the goals, the milestones, right? The hiring plan. You don't oftentimes have to get into the formulas, and that's something that can work in your favor, right? Because you don't need to kind of be going through the model with a fine-tooth comb. So that I think you'll see when I go through mine. And then after the meeting, it's always very critical to follow up, to establish a clear next step. I am fully team share the model after the meeting. Just don't do it before. And if you use Forecaster, you can have an investor access link that you can share with them directly. Google Sheets also has shareable links. If you use Excel, you can just share with them a copy of the file, whatever you decide to do. But definitely always follow up and get that next step established. So those are the kind of the tips and tricks there. And now, unless there are any kind of questions to take now, I want to go ahead and jump into let's look at Forecaster's deck. Let's look at Forecaster's model, and I'll do kind of a mock walkthrough for you guys so you can get a sense of how this stuff looks in practice.
We are all set on questions, Stephen, so feel free to continue on.
Okay, cool. I will. Don't hold back, guys, if you got any. I know I'm going fast for you. So, okay, real world example. Let's look at Forecasters. Let me jump out of the deck here. And open up our investment deck. So like I mentioned, we've raised 9 million across 3 rounds, most recently 4.5 million just this last year. So let's just kind of quickly walk through our deck, and this is the deck that we use. So just kind of going through that here. I lead with market, right? FP&A, big market, this thing's archaically built on Excel, big problem. So I'm trying to go proof of vision here, like prove the market, prove the vision, right? So proof of vision. Oh, we got this great vision for the company. We're going to be this next gen operating system for FP&A, single source of truth. We're like Carta, but for your financial model. So proof of vision, large proprietary data set, proof of vision. We're like these other monster companies in adjacent spaces that have plucked businesses away from Excel. Proof of vision. So a lot of the front end of my deck is just proving, hey, there is a pot of gold at the end of the rainbow, right? It's the interest building stuff. And then I kind of switch into proof of execution. Like we've got this tried and true business model that scales. We've got great growth. We've got great retention. We've got great unit economics. We're smart, like we've taken this strategic position to the market. We've got an unfair advantage on customer distribution. We have a differentiation through a human approach, right? So I'm trying to prove that we can execute through a mixture of traction and strategy, kind of qualitative and quantitative data, right? And then I'm like, hey, we got this great team. Right before I get to the ask where I'm saying, hey, we want to raise $4 million, or maybe it's a 750K pre-seed, or maybe it's a $10 million Series B, right? But we want to raise $4 million to achieve these milestones, right? It's milestones oriented. That's where I just flash this forecast like we talked about. High level, a summary level annual income statement where I'm showing revenue ramp. I'm showing just kind of that high level income statement. And what I want to convey on this slide is that like there's real meat behind this company. So a lot of times when I get to this slide, I'll have been talking about the company. I'll get to this slide and I'll say, hey, look, end of the day, I mean, like we take the financial aspect of this business really seriously, and there's a really bright future of this business. I mean, we've spent a lot of time modeling this business out. Look, like I recognize like we're an early stage company and there are a lot of unknowns, but I think there's a very bright future for this company. And to be honest with you, like if I've done my job here today and convinced you of the merits of this business, I would love to spend, 45 minutes or an hour with you walking you through the model that supports this financial forecast and just walking through how we acquire and how we monetize and how we're going to scale the team. Yeah, I think that you might have some really interesting thoughts to offer on that front. I feel confident that it would yield, a good conversation. So, we can talk a little bit more about that at the end, but if you're interested in doing that, I think that would be well worth our time. So something like that you're already kind of, you're giving them a very clear picture as to what that next step could look like, and that will help them take it. If you end the pitch meeting just saying, hey, let me know if you want to take a next step. I'm happy to do whatever you like. You'll get a lot less than if you say, hey, I'd love to schedule a 45-minute financial model walkthrough with you next Tuesday at 11 a.m. Eastern. Can you do that time? Because I'd love to spend that time with you and understand if there's a deal to be done here. You'll get a lot more meetings. And so that's the idea, is using the model as a conversion mechanism like that. So I say something like that, and then I move on to the ultimate ask before I close out that pitch, and I try to get them to, if I can, schedule that next meeting. So that's how I run it there in the pitch deck. I just kind of run it like a conversion mechanism like that, and try to get them into that next meeting. So that's the deck. Now on the model, let me pull this up.
As you're pulling that up, Stephen, we had
Yeah.
a question come through in the chat. So in essence, you want to show investors what you have done, what you are currently doing, and then what you will do in the future with your business model. Is that correct?
100%. And I actually love that that like kind of packaging of it. Yes, absolutely. It's like kind of past, present, and future, right? You're trying to say, hey, look at what we've done in the past. That should give the investor confidence, right? That, hey, these guys can execute. Look at what we're doing right now. That adds to that level of confidence and trust and ability to execute. But then like the investor is ultimately investing in the future of the business. They're not investing in the past, they're investing in the fact that you're going to continue to grow from here to this big monster exit at the end of the rainbow. And so that's where the model comes in, is like saying, hey, we've been on this path. If we just continue on this path and make these upgrades, here's where we end up. And that's where you make all your money. You know what I mean? Like that's the kind of story that we're trying to tell here. I think that's a great packaging of it there. So yes, 100%. And that's where the model can be such a powerful storytelling tool, is like one of the big opportunities that a model has is to tell the exact same story that you tell in the pitch. It's just telling the story with numbers, right? But like at the end of the day, like if we look at my model here, which lives in Forecaster, obviously, right? But if this was Excel or anything like that, same deal. But my model lives here. Like this is where our model lives, and it tells the story. Like let's say if I like zoom out here and look at this as like a 60-month into the future, and I look at it annually, it's telling the story of how I scale my customer acquisition. And it's telling the story of like, we get a lot of organic because there's a lot of word of mouth. We get a lot of partnerships, right? We get a lot of referrals. So it's like, it's telling the story of how we acquire customers. It's also telling the story of how we ultimately monetize those customers, right? So on the revenue stream side, I'm telling the story of like, how much of our revenue is SaaS versus services? How does that scale? And like, what is our business model, right? And that kind of thing, things that would be highlighted in the pitch deck. It tells the story of the team and how you scale the team and like how the team grows over time, the head count at the end of the day, right? And so like you're telling this story. It's just a very numerical story, right? And that has a tendency to hit well with investors because like a lot of them are kind of numerical people, right? They're financial people by trade. Not always, but a lot of times. So that's the idea, is like when you're presenting your financial model to investors, remember that your goal is not to tell them about the model. Your goal is to tell the story and to reinforce the story, right? You're always storytelling. And so that's where you want to live, is like tell that story, to ultimately impress them, to get them to write a check. And so you're trying to convey, these two concepts, that there's this bright future for the company and that you're the type of founder that knows how to get it done, And so that kind of brings us to, okay, we get an investor to say, yep, would like to spend the time with you to walk through this financial model. How should we go about doing that? And so the way I think about this model walkthrough is there's three parts, right? So the first part is what I call revenue. So you're going to walk the investor through how you acquire and how you monetize. You're going to really focus your efforts on telling the story of how you acquire customers and how you monetize those customers. And why would we start there? Well, we're going to start there because like at the end of the day, we're there to get an investor to invest. So if we're going to get them to invest, kind of like sales, right? If you want to get someone to buy, you got to remove any objections that they have. A lot of an investor's concerns, a lot of their objections, right? A lot of their questions all lie on the revenue side of the house. So like, how are you going to acquire and how are you going to scale that up? What's your conversion going to be? What's your sales cycle? How do you monetize your customers? What's your retention look like? Tell me more about your product. Like they all hinge upon the revenue generation side of the house. So we want to focus our time up front with the investor on the things that they likely care about the most, so that we can remove those impediments from investment and kind of, help them get their checkbook open, so to speak, right? So it's like focus on revenue first, walk through how you acquire customers, and then how you monetize those customers. And we're going to come back and I'll do that in just a minute, with our business. So that's the first part of the story, is revenue. The second part of the story is use of funds. I think there's a very logical next step when you're going through revenue, right? If you're looking at it even, let's say, on a monthly basis, and you say, hey, look, over the next like 24 months, like, here's we get up to 817,000 in MRR. And by the way, this is our actual model. This is Forecaster's actual financial model we're looking at. It's like you have to say, hey, that's where I'm going for the next couple of years. It's this really exciting revenue forecast for the company. But if we're going to hit this revenue forecast, we need resources, right? So you go through revenue, and then you have this natural, logical next step where you say, hey, if I'm going to hit that forecast, I need to hire these people, right, to fill skill gaps within my team, or I need to hire salespeople to sell and analysts to build models, right, for my own business. But you could walk them through some of the people elements, right? Because people a lot of times are the biggest like expense, that we have a lot of times as a business. So walk them through those big expenses, how you're going to deploy their capital to achieve the milestones, right? That's use of funds. So you're going to walk them through maybe people, expenses, things like that. And then the final bit of the story where everything kind of pulls together is you want to go over to the financial side, right? So any good financial model has assumptions. That's where you're actually building and managing the model, and then financials, which are the three big financial statements. And you want to kind of loop back to those financial statements. You want to zoom back out, and you want to kind of close the loop for the investor to say, hey, if I zoom out and look at this big picture, like we've got a really bright future for the company, right? We've got a really bright future for the company. This is a very investable company. And look, like I think this has been a great conversation. We'd love to have you in this round. We're raising a $1.5 million seed. We've got 500K committed. We're looking for a lead to come in, do 500K $1 million, help us set terms. I think you'd be a great fit for that. We'd love to see you lead this round. And honestly, like I'd love to work with you as a founder. Like, shoot me straight. Where are you at with respect to making an investment decision? And look, what can I do to make that a yes, right? Because I want to get this deal done. I want to get back to growing my company. So you're ending with kind of closing the loop with showing them that annual income statement like you did in the pitch deck, and asking for the business. That's the most important thing, is like making a direct ask, trying to assess on that call how interested an investor really is, where they're at in their investment, process, when they can make a decision, what other information they need from you in order to make that decision, that kind of thing. So you're going to start with what they care about, because that's what's going to open them up most to investing. And then you're going to end with what you care about, which is the investment and kind of the big picture, because you want to get that clear read. And you want to establish a very clear and time-bound next step by the time you get off the call, because fundraising is a game of momentum, and you need to keep that momentum up. So before you get off the call, you want to have a very clear idea of where you stand with that investor. Big picture storyline, those are the main parts. Any questions about that or anything like that, please do throw them out there. It's important that we kind of get that level right, and then we're going to dive into. I'll start to do kind of the mock. You know what I mean? I'll give you a sense of kind of how I do this stuff in practice. So this. Okay, so imagine, so now like we'll do kind of a mock meeting here. We're like, how should we actually go through the model, like revenue, et cetera. So let's say you guys, are an illustrious investor group, and I pitched you, last week. It went really great. I was like, hey, let's do this model walkthrough. You said yes, so here you are. I would start with something like this. I'd say, hey, first off, thanks so much, for taking time out of your day to take a meeting with me. I'm glad we're both here doing this. I know you got a lot of founders to meet with, and I'm running a process, but I had a good feeling about that first meeting. I really do think that there's a deal to be had here, and like I'm just excited to talk to you a little bit more about the business today, and just see where things go. So like what I had in mind for today's meeting is that we'd start with the revenue side of the business. Like I really want to walk you through how we acquire customers, how we monetize those customers, some of the key strategic bets that we're placing. Because I think you and I would both agree, right, that like revenue is the most important thing here. I mean, I think end of the day, if we can acquire and monetize better than most, we're going to have success. So let's talk about that first. Let's make sure you're comfortable with how we acquire and how we monetize. And that starts with customer acquisition, right? You can't monetize any customers you don't acquire. So let's start with that. And you can see here, in my model, and it goes back further as well. We use this model operationally. So every single month we update this model with real data. These are our real numbers in terms of customer acquisition. You can get a real look at that on a channel by channel basis, right? So, this is a model that we live and breathe by, we run the business by. And so because we recognize, look, we're an early stage company, the best way to acquire companies is track what's working, right? And double down on that. So if I kind of zoom out here and talk about that, you can clearly see what's working for us. The vast majority of the customers that we acquire come from partnerships. They ultimately come from partnerships with venture communities where we get out, we provide education and expertise. And in exchange, we just kind of get natural exposure for the company, and people like what we have to offer, and they end up working with us. And that's awesome. So like, that's something we definitely intend to scale, and you can see, it's one of our biggest customer acquisition channels. Another one that's started to kind of get bigger and bigger, and we think will build as we go, is organic. I think ultimately this is a space that we're playing in where there's a lot of organic virality, because we serve founders and we serve startups, and they have a tendency to chat with one another about awesome products and services that they use. So we see that really taking off as we go, and referrals, is another one there where we're trying to sit in between founders and investors, provide value to both sides, create kind of an organic flywheel. So, those are some of the strategies that we think are going to work really well, that are already working on the customer acquisition side. And if we look at kind of where we are right now, we acquire about 30 to 40 new customers a month right now. We're looking to scale that up to just north of 60 by the end of next year. And that would support a 2x year-over-year, revenue ramp for the company. So we think that's, we think that's pretty solid. We'll be at about 5 million in ARR next year. So that's a little bit about customer acquisition. Now, before we move over to the revenue side of the house, I'd love to just pause there, and I'd love to understand any concerns you have with respect to customer acquisition, or just any questions that you have. I want to make sure that like you feel comfortable with how we acquire, that you get your questions answered, and then we can talk a little bit about how we monetize our customers. So time out there, right? So kind of, that is the style that I would recommend for you guys when you're walking an investor through your model. And I want to peel that back, and I want to say, like, let's unpack that a little bit. The first thing is very simple, which is just express to the investor that you understand that revenue is what matters the most, right? Like, expenses, sure, they matter, but really at the end of the day, revenue is the value creation engine. So remind an investor that, like, you recognize that that's the number one priority and that matters. Talk them, if you can do this honestly, talking them through the fact that you use this model operationally, that you have historical data, that is a really powerful thing to do in front of investors. Now, if you're new to modeling, or your business is new, you may not have that arrow in the quiver, and that's okay. You may say, look, we're a brand new business. This model is just forward looking, but we intend to use this model on a monthly basis and update this model with actual data to sharpen this model over time. We recognize we're an early stage company, but we think this is a really reasonable and attractive future for the company. And I'll tell you why, we think we can hit these numbers. So you can say something like that, right? But like, kind of set yourself up for success by talking about the past and present if you can. And then two main things I did. One is I talked to you about my near-term milestones, where we are right now, where we're going to be by the end of the year. And then I zoomed out, right? And I told you, like, what are the key strategic bets that we're placing? What's working? Partnerships. What's gonna work? Referrals and organic. And notice what I didn't do as well. I didn't tell you anything about the formulas or all the nitty-gritty details or anything like that. I talked probably for like 4 or 5 minutes about high-level milestones, strategic bets, kind of the culture of using this model, that type of thing. And then I think the most important thing, which is I flipped it back, right? I was like, hey, before we move on to revenue, what questions do you have? What concerns do you have? Let's have a dialogue, right? Where you can say, hey, you know what? Partnerships, like, are those exclusive? Do you pay for those? How do those work? Who are your partners? What's the deal with that, right? Or maybe you say, hey, you know what? Look, but like, what's your conversion rate? What's your sales cycle? Like, what's your CAC? What's your customer acquisition costs? Like, or who are your customers? Tell me more about the customers that you serve. How many customers do you have, right? There's all sorts of questions an investor could ask. That's exactly what you want. You want to get them talking. You want to get those questions, you know what I mean? Because then you're having a back and forth, and you're getting them excited and interested in the company, and you're having an opportunity to have a dialogue and communicate the fact that, like, your business back to front. So that's the secret here, is like high level strategic overview, open it up for the dialogue, for the question and answer game, and then move on. And like, in my experience, 9 times out of 10, it doesn't even go any deeper than that. It's honestly pretty rare that the investor's like, tell me about the specific formula that you use to forecast like this channel. It just doesn't happen that much. It's usually more of a high level strategic conversation, which I think is in everybody's best interest. So hopefully that makes some sense and resonates with you guys. I think it's super powerful. If you got any questions about that, definitely throw them out there. But this is the kind of style that you want, and I think it's very much a practice makes perfect type of thing. So that's what you're going for there, and you're engaging in that conversation. You're answering those questions, and then once you do that, and it'll take as long as it takes, then you're flipping over to revenue, and you're continuing along the journey. And so with the revenue side, very similar. You're going to say, hey, look, and when it comes to monetization, we're SaaS, like remind them of the business model. Hey, we're SaaS plus services. Our main business model is SaaS subscriptions. We have a variety of plans, monthly and annual, but we also offer CFO services. We offer fractional CFO services of lots of different, shapes and sizes to make sure that like we provide the most value for our customers. So remind them how you make money. Don't assume that they remember that, from the first meeting, and then similarly, talk about where you are right now. For us, we'd say, hey, look, we've come a long way. We're right at about 200,000 in monthly recurring revenue right now, so that's great. If we hit the numbers on the customer acquisition side, like I showed you, we'll get up north of 400,000 in MRR by the end of the year. That's just north of 5 million in annual recurring revenue. We think that's a great number for the company. And if we look at it long term too, if we kind of zoom out, you can see like in the near term, about a third of our revenue is services, but over the long haul, that becomes more like 10%. So we do think that the SaaS side of the business is going to scale significantly faster than services. We like the services. We think it's a good, solid margin. It really provides a lot of value to the customer. So we like doing it, but it's definitely something we're a SaaS company at the end of the day. So you can talk a little bit about the evolution of your business as well, how the business model is going to change over time, what your goals are long term, but very similar style, right? Just like tell them about the core business model, tell them about where you are right now, tell them about near term and long term milestones, and then do flip it back, right? Then say, hey, what questions do you have about the revenue side of the house? Let's talk about that before we move on, and we can talk a little bit about how we plan to deploy this capital to hit these milestones, because we are going to need resources. We are going to make some hires. I want to walk you through our hiring plan and some of the big expense categories that we have. But first, let's talk about revenue, And in my experience there, investors will ask a lot of questions maybe about your churn or retention. They'll a lot of times ask questions about your pricing. They'll ask questions about your business model in general, your product, your service, how it works. They'll ask about unit economics. They may ask about your unit economics. You want to be prepared to talk about that. So they'll ask you about some different questions related to how you monetize, and you want to simply walk them through that aspect of the business. Answer those questions, engage in that dialogue, move on. So that's. You've probably hopefully seen a pattern here, right? High level overview, open it up for questions, engage in that dialogue, move on to the next piece. It's just rinse and repeat as you go through the business. That's it. It's really as simple as that at the end of the day. And I won't kind of maybe keep going through all these. I don't want to like bore you guys, but as you keep going, you're just going to rinse and repeat that. One thing I'll say on the people side that I've found to be effective is talking about what I call skill gaps and functional roles. So I think what can be effective with investors when talking about people is saying, hey, like showing maturity by saying, hey, we have these skill gaps. We need a product person. We really need someone to own our, outbound sales, whatever it is, right? Identify the skill gaps that you have within your team, show investors how you're going to hire to fill those skill gaps. That's one aspect. The other aspect is what I call functional roles. So for my business, we need sales reps to sell, we need analysts to build models, we need developers to build the product. Those are functional roles that I'm going to be hiring a bunch of as we go. So that's one of those areas where I can talk about those functional roles. And then I can show them, hey, look, like, see, I've got these onboarding analysts modeled in to where, as we scale the business up, we're going to hire, here we hire one analyst, and then we're going to hire another one right here. We're hiring those analysts in a dynamic sense. They're attached to kind of the rest of the business, right? So that's one of the things that you can showcase in your model to show that like your people cost is going to scale, you know, with the business. So, but you know, talking about people, that's an important one. And then final piece here, you know, when you get back to the income statement, you want to just zoom out and you want to just close it out. You want to close it out by saying, hey, look, long term, right? We hit these numbers. This is going to be a big business. This is a really meaningful business. I feel really confident about this business. And like, that's why we're raising this investment round. We're raising this $4 million round because our model says in order to hit our revenue milestones, which is 5 million in ARR by the end of next year, we need $3 million. And we're smart enough founders to know that we should raise with a buffer. So we're raising 4. You know, we've got $1 million that's committed, and we're looking for a lead investor to come in and set the terms of the $1 million to $2 million check. You guys seem like a great fit for that. So look, I mean, I just love to get a clear read on where you're at with respect to making a decision, because you know, I obviously want to get back to running the business as quickly as we can, and you guys seem like a great partner. You really do. So, you know, where are you with respect to making an investment? What do you think about this, and like, what do you think it's going to take to get a deal done here? Something like that, right? Just like ask for that business, be direct, get a read on what they say, get a read on how their face looks when you say that. You know what I mean? Try to get a picture as to like where they're actually at with respect to making an investment. Have that final dialogue, you know, before saying, okay, cool. Well, like, you know, I'll share with you those resources they ask for. You know, I'll give you a couple, you know, customer, you know, references, or I'll, you know, connect you with the lead investor of our last round, or I'll do whatever, right? Or maybe they're ready to make a decision, but they're just like, hey, we'll talk about it on our Monday meeting next week. I'll get back to you on Tuesday. Great. I'll follow up on Tuesday. Look forward to hearing from you. Let me know if you need anything in the meantime. You know, you're closing that out. You're making sure there's the next step. You're making sure there's clarity. And then you're moving on. So, there you go. That's all I got for you guys today on that front educationally. Hopefully that's helpful. Hopefully some of that resonates, you know, and if you got any kind of questions to throw out there, we've got 10 minutes. We got 10 minutes to cover some questions and kind of close things out here. So, would love to take some questions if you got them. And yeah, just thanks for listening. So.
Awesome. Thank you so much, Stephen. We have a couple questions kind of queued up already. The first comes from anonymously. At the first introduction or pitch meeting, are you building in the slides that discuss the 3 elements you outlined, which is revenue, use of funds, and big picture wrap up? Are you telling the potential investor in that first meeting you are raising a Series A for a set amount and we are seeking a lead investor, or are you using that first meeting to focus on the company and its products and hold off on the finances at a later date?
Yeah, great question. So a little bit of both would be the quick answer. So pulling back up my deck, I definitely want to focus on those kind of core elements to the company if it's the first meeting to build the interest. So I'm focusing on vision. I'm focusing on kind of what we're getting after here, the problem that we're solving, the solution that we offer, that type of thing. But naturally, as the deck goes on, you know, I am kind of stepping into revenue and where we've gotten so far. So kind of like the vision as well as like the present, you know, in terms of where we're at financially, right? So talking a little bit about that aspect. But then as I go through, it's, you know, I am ultimately at the end of the day, it's all culminating in an ask. I don't necessarily always advise that you put a name on it like a Series A. A lot like what I would do when I would get to this slide is not call it anything. I just say, look, you know, if we want to continue on the trajectory that we're on, you know, we're raising $4 million and we'd love for you to be a part of that, you know, and like, here's why we're raising the 4 million is to hit these milestones. So I do think the deck should ultimately end in an ask. The ask should be a dollar amount, and the dollar amount should not buy you a use of funds, right? It should buy you milestones. It should buy you 7 million in ARR. It should buy you 2,500 customers, right? Like it's buying you growth. So align it in that way. I don't put the use of funds in the deck because I want to focus on what I'm going to get out of the money, not where I'm going to spend it as such. Now I'm prepared to respond to use of funds and how we're going to spend the capital. And that's sometimes stuff that I'll put in the appendix. So one thing you'll see in my deck as well is relatively short deck, I think 15, 20 slides. And then look at my appendix, look how deep it is. There's like 30 slides in my appendix. I call it an iceberg deck where what you want is like a relatively short deck that's going to capture an investor's attention. And then when you get that first question from an investor, if you've intuited their questions and you have a slide in your deck handling that question, like, oh, you want to learn more about our channel distribution? Here you go. Then it just makes you look really, really sharp. It makes you look like you're a step ahead of the game at every turn. That has a tendency to drive confidence. So I would say, like, keep the deck relatively short, interest building stuff, end with an ask, and then use of funds, lots of juicy detail. Put that in the appendix and reference it when you get to the Q&A portion. Great question.
Awesome. Thank you so much, Stephen. Next we have a comment and question from Jeff. He says, I'm a pre-revenue startup in the entertainment space, gaming, NFTs, and virtual worlds, and I find it hard to show financial numbers because they are all over the place. He's building an IP in this action sports space, and so he wanted to ask you for your thoughts on how to show financials in that space.
Great question. So, and this is actually one that comes up quite a bit, right? There's like, especially when you're early stage and are in a space like that, like, yeah, things can be always changing, it can really be kind of tough to pin down. So what I think the answer is here, and I'm gonna speak generically because it's all I can do without having a deeper level of context, Jeff, is basically say, if you're early stage, if there's a lot of unknowns, if it's tough to kind of pin down in this way, you want to keep your financial model relatively high level, because if you go really deep, it's just a bunch of false precision. So keep your model relatively high level, and you just have to make your best guess, and you have to kind of be aware of that, right? So you're going to have to say, look, like, there's a lot of unknowns, there's a lot of moving pieces, a lot of things changing, but based on everything I know right now, here is my best guess at what the future will hold for the business. So you're kind of modeling that out, knowing that it's wrong, knowing that it's going to change. But you can only do what you can do right now, which is just model that out at a fairly high level. And then when you sit down and when you talk investors through it, I think it's very important. I think it's very mature to say, look, we're in a market right now that's very uncertain. So I think we can both agree there's a lot of unknowns about the future. But as you and I both know, that's just the game that we're playing here. And at the end of the day, we're the type of company that likes to plan. We're the type of company that's going to set goals and manage ruthlessly to those goals. Here is what we currently think is going to go down. Here's how we think we're going to acquire. Here's how we think we're going to monetize. Here's how we're going to manage to that. We're going to stay agile. As things change, as the market develops, this model is a living, breathing document that we use for business planning. So things will change. But as far as where we are right now, this is what we think is going to happen. This is why we think that's going to happen. And I'd love for you to be a part of it, right? It's that type of thing. Investors are much more interested in getting a window into your head than they are into the numbers. They want to know, hey, is this founder thinking the right way? Is this founder kind of really critically thinking through the business? And not only that, but can they articulate that? You know what I mean? Can you actually articulate why you think the business is going to go this way? I think focus on that and take the pressure off by saying, hey, look, there's a lot going on in the market right now. Things are going to change. We recognize that. I think that's kind of the sweet spot that you're shooting for. And I hope that's helpful, Jeff. Any other questions dangling out there, Jimmy?
I think we are all good on questions right now. Nothing in the Q&A, and we answered all the questions in the chat.
All righty. Well, I can say I just kind of a few things to close us out here. So like I said, you guys do get a 20% off discount to Forecaster if you are interested. Of course, we'd love to work with you. We'll do great work for you. But like I said, I'm not here to sell you on the business, so don't feel any pressure for me to check it out. Just I want you guys to know that if you are interested in getting a great model, we've definitely got your back on that. Like I mentioned, we got a variety of plans. They all come with a human expert who's going to be with you, every step of the way to make sure you get a great model and you can present it well to investors. So, yeah, just appreciate you guys. I hope this was helpful. I hope I added some value to your day, and wish you the best of luck out there in all your endeavors.
Thanks again. Yeah, that was great, and excited yeah, to continue the relationship between Prepare for VC and Forecaster, and looking forward to more of these together.
100%, Jason. Yeah, really appreciate you putting this together and letting us be a part of it. So yeah, exciting stuff.
Thanks again.
See you guys.